Bitcoin just hit a 2-year high, exploding towards 60,000, and Saylor and Microstrategy continue to double down. They just bought another 3,000 Bitcoin, holding a total of 193,000 BTC. We're gonna break down the latest from Saylor, let GigaChat explain why it's time to ditch the Magnificent Seven and buy Bitcoin. Oh, and stay until the finish for some bullishness from Samson. We're gonna get into some candleography, baby. Is Bitcoin about to hit 200,000? Is a god candle being built as we speak? Hey, we got a lot of bullish news to cover. Let's get it.
Party, that party. Yeah, come and have a good time with G.O.D.
So here we go, major bullish day. Bitcoin hit a 2-year high, approaching 58K for the first time in 2 years, and the Bitcoin ETFs have just recorded record high volumes, 3.2 billion in a day yesterday. This is massive and definitely a major driver behind the recent price surge. And also, not to mention that the sellers are being exhausted, only 22.4 million out of Grayscale yesterday, a record low outflow with a record high in trading volume of 3.2 billion. Now let's get to the man of the hour, Saylor again. MicroStrategy, 3,000 plus Bitcoins, now at 193,000. It looks like they're working hard to attain that 1% Bitcoin accumulation, and they are well on their way. Saylor and MicroStrategy continue to win in just a major way. Now you need to check this out. GigaChat is saying it's time to dump the stonks and go all in on Bitcoin. The Magnificent Seven, well, look at the past 14-year history. Bitcoin has absolutely destroyed it, and in the coming future, that trend is just going to continue.
Now, there's two problems with investing in those Magnificent Seven stocks today, in my opinion. And the one problem is everybody knows they're good and everybody knows they're essential. And so the market is adjusted. That means that they're not undervalued. The second problem is the regulators and politicians will increasingly target them, their targets, because they're companies, whether it's targets to unionize or targets to fine or targets to regulate or targets to embargo or lever or censor, or, they're just, or tax, they're just targets. And that's challenging. And the third is they're companies. And this is related to the second problem, but it's a much deeper idea, which is a company is a capital structure, and the capital structure has a finite capacity for you to invest in. So for example, if the stock of a company triples overnight, like Meta doubled the other day, if it doubles, then, and it's valued based on cash flows, and then the cash flows have to double. If you double it again, the cash flows have to double again. If you increase the stock value by a factor of 10, expectations for cash generation have to increase by a factor of 10. That makes them even stronger cash derivatives in a period when you have inflationary money. So you're valued on cash flows, the money is losing its value, and so the debasement of the currency strikes at the heart of the value proposition of the company as a store of value. So that makes them increasingly risky and fragile, and that's exacerbated by the fact that there's massive political pressure in the conventional financial environment for them to return their capital to their shareholders. So when Meta stock doubles, they announce a $55 billion stock buyback, and then they announce a dividend. And that's Apple's playbook. Apple has been buying their stock back and dividending out their excess cash. Well, the problem is the company is valued, or the stock is valued almost exclusively on the P&L, or that is to say, the discounted value of the cash flows as expected into the next future, the next decade of cash flows. If they took all their cash and they bought Bitcoin, let's think about like Meta, if they didn't give back the $55 billion. What if they actually bought $55 billion worth of Bitcoin? Now think about that for a second. If they even bought $10 billion worth of Bitcoin and they announced that to the marketplace, Bitcoin would triple. They would have $30 billion of property. It would be going up 20 to 30% a year. So within a few years, they'd have $100 billion of property. If they actually executed the $50 billion buy, you would have $150 billion worth of property within 24 months. And that $150 billion would be accreting at 20 to 30% a year. But let's just say 20% a year. You're going to generate $30 billion of investment income per year, compounding. And so now you end up with a company where the balance sheet is worth hundreds of billions of dollars, not just the P&L. Most of these companies, they don't have property, so they're valued on cash flows. And that means as a store of value this decade, that's increasingly risky. right? It's probably the best conventional idea anybody has. You know, having the best conventional idea is, you know, it's like buying the best building in a war zone. It's like, okay, well, it's the best you could do, but you're still losing. Or it's like, it's finding the most comfortable cabin on the Titanic. Like, the ship is sinking. You have the presidential suite. Good for you. Now, I think that's hyperbolic in this case. I don't think the Magnificent Seven are sinking, but I think that when you're stuck in a certain frame of reference, there are just various degrees of mediocre outcome. There isn't winning. In order to win or get an excellent outcome, you have to think outside the box. And that means if you're in a war zone, you got to leave. If you're buying currencies that are denominated in a collapsing currency, you know, whether it's a peso or a lira or a naira or whatever, you got to get out of that currency. If you're buying currency derivatives denominated in dollars, forward discounted, and you know the dollar is going to be inflated at 7 to 8% a year, well, that's your hurdle rate. You're going to have to grow your cash flows faster than 8% a year. Now, how many companies can grow their cash flows 15% a year for the next 20 years? Okay, now you might find some. Now, the question is, can you protect them against politicians, foreign and domestic, right? If your local politicians like you, will the foreign politicians like you, or vice versa? So those kind of investments, they're very fragile, and I think you got to be aware of them. And so I guess that's why I did what I did a decade ago. It paid off really well. But when 2020 came, the entire world changed. And the question is, what's the next thing? Yeah, Bitcoin's the next thing. But Bitcoin is like, I've said it before, it's kind of like Apple or Google in 2010, misunderstood. Everybody needs them. Nobody can stop them. But it's a bit better because Bitcoin is an asset class. And so its target use case is store of value for the civilization, which means that there's no reason why it doesn't subsume gold, and gold's worth 10 trillion as a store of value. Why can't it subsume real estate at 100 trillion? Why can't it subsume all store of value property, which gets you to 2, 3, 400 trillion? And the more valuable it gets, the more useful it gets, right? The fundamental big idea, and it's very difficult to explain this to people, but if Bitcoin increases in value by a factor of 100 because people buy it as a store of value, it's 100 times more valuable. Whereas if Apple stock is 100 times higher priced, the cash flows in the next 20 years have to keep up, right? And people that criticize Bitcoin, they say, well, it's got no cash flows. Well, that's not the defect. That's the feature. It's not a liability. It's the fact that it's something that is not valued on cash flows means it's never going to miss its quarterly cash flow expectations, right? In fact, it's a reflection of the cash flows that have flowed into it. And so Bitcoin is just a much more powerful idea. It's the digital transformation of capital.
We're going to see how it plays out in history, but the new Berkshire Hathaway, the new Warren Buffett, the new Oracle, if you will, Michael Saylor, and 100x bigger and better, super based, as MicroStrategy is up nearly 12% today, headed towards 800 in their stock price, just absolutely killing it. Looks like the Bitcoin doubters and the bears got a foot in their mouth now, as a lot of people, including Anthony Scaramucci, are eyeing 200K. Their idea is the fact that Bitcoin has tended to 4x close to halving, and as we're over 50K at this point, 200K seems very plausible, but he is not the most bullish. We're going to get to that soon, but with all this going on, Bitcoin flying off exchanges like crazy, it is more important than ever to self-custody your Bitcoin. Now, in learning Bitcoin, we know the why. That's pretty easy to understand. The fiat nightmare we're living in, and of course, number go up is a great advertisement. But what our partners at the Bitcoin Way do is they help you with that challenging part, going from the why to the how, and they are here to help you bridge that gap. Simply Bitcoin Originals are powered by the Bitcoin Way. They are your IT team in the Bitcoin world. They can help you from the basics of just getting started, from setting up your first wallet and node. If you're a business, accepting Bitcoin payments, but it doesn't stop there. The Bitcoin Way goes well beyond wallets, nodes, inheritance planning. They cover all aspects of Bitcoin security, privacy, cybersecurity, all the way down to configuring routers, devices, and networks, improving your overall digital hygiene, and much more. If you're looking to get started or take your setup to the next level or dive further into the Bitcoin rabbit hole, you can schedule a 30-minute call using that link below. All right, it looks like you made it to the finish. Now for the big reveal. What is a God candle? What is an Omega candle? Are we going to see them this cycle? And Samson Mao is doubling down on 100K Bitcoin before the halving, currently scheduled around April 20th. Let's roll it.
Yeah, so the Omega candle is a 100K green candle on the daily, and this would happen after a God candle, which is 10K. Okay. So the God candle has been talked about in trading circles for some time, but I figure with the advent of the ETFs and this massive change in the macroeconomic landscape, it's time for a bigger candle to measure. And I like the term Omega because you can quantify it, like a 2 Omega day would be a 200K candle, or a 3 Omega, kind of like you measure earthquakes on the Richter scale, right? That's like a magnitude 6, right? So I think we both agree that 1 million is an inevitability for Bitcoin, just simply because we're printing and have printed so much money. Debt is through the roof. So we're going to hit some point at which either they lower the rates or the money dies. But I mean, both are going to mean Bitcoin's going to go up. So it doesn't really matter. It's an eventuality because the Bitcoin price, the Bitcoin fiat price is a factor of fiat clown world. And there is no max for fiat clown world. There's just burr. So 1 million, 10 million, we see it all the time. And if you look at like if you look at the Turkish lira charts, Turkish lira, TRY, USDT, they already almost have Omega candles there. So you have like days where it goes up 80,000 Turkish lira or 90,000 Turkish lira. So it's not really impossible because the money is broken. So anything can happen. Now, my thesis is that we're going to see it before the halving, which is in the next 2 months or so. I talked to someone on Twitter and they said, put a date. So I said, okay. I said days to weeks, it'll happen. So this means we'll shoot up over the course of weeks, at least 10 Omegas to reach 1 million, right? So I just said, okay, well, let's just say ETF approval date. So that would mean 7 weeks after that. So sometime late February. But I think that's not going to hit now because of all the grayscale selling. But I still think when it starts, it's just going to ramp up really quickly and just go vertical. And this is because of a number of effects at play. You have a multiplier effect. Bank of America had it in a previous report that it was 118 times. So every dollar that goes into Bitcoin boosts the market cap by $118. And then you have the Veblen effect, which is as something becomes more valuable, people want more of it. And we see this from time and time again. When Bitcoin is at an all-time high or close to all-time highs, people start calling you and say, hey, Walker, well, tell me about this Bitcoin thing and how do I get some? But they never will call you up when Bitcoin's at 15K. Like, Walker, it just tanked to 15K. How do I get some? Not possible, right? So yeah, when we start going up to like 100K, that's when people start going crazy. At 200K, they go even crazier. And then somewhere between 250 to 500 is the Veblen threshold, where we kind of cross into gold AUM. And at that point, it's just, you don't even need to think about it anymore. You just need Bitcoin because it's the global reserve asset. It's the new gold.
All right, ladies and gentlemen, let us know down below. Are we going to see a God candle? Could we see an Omega candle this cycle? Comment, let us know where are we headed. And I think we know in the short term, basically no one knows what the hell is going on. But in the long term, well, we can take a look here. Maybe by 2030, going along with Michael Saylor's prediction and some others, it's not overly bullish to see a $1 million Bitcoin by 2030. But some are a little more bullish than others. In a recent episode, we had Samson Mao talk about 1 million by the end of this year. Regardless, what we do know is there is massive institutional inflows. Banks are coming on board. Things are very bullish. Bitcoin are flying off exchanges. The halving is just around the corner. If you were looking for a time, it may just be now or never. Catch you all next time. Peace.
If you prefer to go down with the ship, fuck you.